Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our big favorite markets and formulate an attack plan for tomorrow's trading. Tomorrow being the 22nd of the month, and well, unfortunately today we were pretty much right in what we were expecting to see. Two back-to-back massive big moving days. And that led into today, which, if you were trading the US session, you may have fallen asleep during because it was pretty darn slow. But as long as you stayed patient, stayed vigilant on your trading, you probably had an okay day. Crude oil inventory is obviously today throwing the markets for a little bit of a loop, and just generally kind of an oddball sort of day, but at the same time, kind of expected too. Before we jump into the charts, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to allow you to add your email to our email list so that we can send you a message every single time one of these videos comes out. Along with that, we talk about all kinds of different stuff, from stocks to cryptocurrencies, you name it. If it moves, we're probably going to talk about it at some point in there, so it's a great one to get your hands on. At the bottom of the page, every day we post two different things. Firstly, before the live trade room opens every morning, we go over the live trading morning prep levels. Those are the major levels of support and resistance for our favorite markets. And then in the afternoon session, we talk about either market psychology or a trade that we took in that room that day, just to kind of give us a little bit more practice, right? Giving us more information, learning more and more, staying a student of the market, and just, growing as we move forward. If you haven't done so already, make sure to click on the live trading room subscription and trial info. That will let you sit down for a one-day trial in the room, see what we're all about. You can always sit down and, just kind of hang out with us. Maybe you might find some interest in what we're doing, maybe even find some trades, who knows. But either way, it's a great way to see what we're all about, see how we trade throughout the day, and just to kind of see us in action. If you do enjoy it, you can always sign up for a weekly or monthly subscription, and of course, if you join as a full-fledged VIP member, you get the live trade room as part of the package. Now, taking a look at the overall movement, we have the euro, which is, for the most part, I would say, rallying pretty well. One big thing that stands out here is the overall range-bound sentiment. The range is just, it's cemented in what the market is doing. Everything that it's been doing so far, it just cannot get away from this range. We had a range that started the day off. They broke away, but then went into another range. They tried breaking down, but that failed. Went into a range for a little while there. Broke out again, and now we're sitting in a range again. So it's kind of like a trending range environment. And a lot of times when you find that type of situation, it tends to have a directional bias to it, but that directional bias is weak. You got to be careful on a bull directional bias, as an example. You have to be careful not buying too high, because you might end up buying the high of the range, and then you kind of have to hold on to the bag while it falls against you. You don't want that to happen. So we have to play this a little bit safer in trying to buy deeper pullbacks. We do have an opportunity at 12,100, that big round number at 100, along with the fact that that is where kind of we broke away from the earlier price action. I would love to see a dip down to hit that, something like we had back here, where we go into a range, dip down and tap support, and then run away from it. I would like to see the same thing here at 12,100, but if we can start getting some heavier pullbacks, 12,030, obviously that big 12,000 level, 11,985 or so, all the way down to 11,920 to 15 are going to be nice areas of potential interest. It's just a matter of how far the market wants to pull back, and given the overall range sentiment that we've had for today, I have to assume that this breakout move up probably not going to last very long, and I would rather be buying as cheap as possible to avoid a situation that if it does start collapsing back to the lows, we're not left holding a huge bag, just a small one. So overall, range-bound sentiment, looking to buy as cheap as possible so that we have as much room for profit as we can. Over on the gold market, gold for the most part range-bound as well. Wasn't really able to do a whole lot today. We started off with a nice grind higher. Really, I mean, again, I think grind is the best way to put it. We had a nice spike to start it off and then just ground its way higher. Finally got a nice little pullback. Went back to the highs and then collapsed all the way back to the lows. Once it hit the lows, though, guess what? Right back up towards the highs again, and we were dealing with a little bit of a range-bound sentiment here as well. The last line of defense that the sellers have before the buyers are able to take it to the highs is at 1247.2. They initially defended it. They defended it again, but you can see they're just running out of steam. They're running out of ammo to try to keep defending this level at 47.2. And if they can't hold this area, there's a very good chance that we break away and start moving back up towards the high. So that 47.2 could end up becoming support if we break away from it. But if we do catch a little bit of a pullback, 45.1, 44.3, and 43.1 would also be nice areas to potentially buy into, assuming that this will then turn into a range and you're looking to buy low in the range. 43.1 would be the better of the options. But if we do start breaking away, 47.2 might be a nice little breakout pullback type scenario to keep that rallying up to a new high. Overall, though, for the most part, really, we're just kind of in a range. We have a bearish overall bias, so if we do make those new highs, I wouldn't necessarily mind thinking, well, longer term possible sell, but we'll have to see. Overall, just kind of range bound, a little bit grindy. Got to be careful. Crude oil came out with its inventories kind of as expected, or at least what we were talking about in the room, where they had a negative API, they have a negative forecast for today, and the market has been building ever since about 3 o'clock. The market participants are likely building into the move and buying before that news comes out. When the news comes out, it spikes higher because it came out as expected. They sell into it, they dump all of their long positions, and the market collapses on bullish news. This is where a lot of people look at this and say, well, wait a minute. The news was bullish. Why did we fall? Really good example of that building in an accumulation on the way up on crude oil. And overall, it made a lot of sense, at least the way that we were looking at it in the room. Big dive down into a new low, into a push lower. I mean, a push is an understatement. Huge drop lower. And that opens up a huge objective to the downside, 41.28. You can barely see it down there. But at 41.28, that is the downside objective for the sellers to reach out to. Pending the fact that we are getting stuck on a little bit of a 3-push wedge bottom. We have the first push, big distance between the second one, and then a small little one for the third. Arguably, this could just be considered a 2-push wedge so far, and we're looking for that third test, which is what we're looking for as well to complete that objective to 41.28. Now, what I would like to see here, short-term selling opportunities might be a little bit more aggressive, somewhere around 42.70, but I would like to see 43.14, 43.38, 43.74, get some good prices in here to sell into, along with the prior low of day sitting there at 42.94, so we can dive in and then push the market down to finish that objective at 41.28. Very bearish in sentiment, just a matter of where the entry point will get for crude oil, at least what the market will give us to work with. And then finally, on the S&P, overall, it's a range here as well. Not really a whole lot going on. We had some downside bias initially, but it took it all back. We ended up going down, making a new low, making a new high, making a new low, and probably going to cycle up to attempt to make a new high. So really what we're looking for here is buying and selling at the extremes. We want to stay out of the middle, which is right where we are right now. Now, along with that, to add a little bit of hecticness to this range, we have weekly and daily support cutting straight through the middle at 24, 34 half, and 34 even. One a little bit higher up, daily resistance at 36 half, but at that point you're nearing the highs of the range and likely going to find some selling opportunities off that 38 half to 37 half. If we do get a cycle back down, 29.25 would be nice, but given the context, we just made a new low and we haven't made that new high yet. So if that is the case, 29.25 I would consider the earliest. You may even want to consider dropping down a little bit and saying between 28 and 27, maybe even down to 26, buying down here because we haven't really had that full cycle back up towards the highs, and that may mean that the sellers make another attempt at the lows. Either way, though, looking to buy low, looking to sell high, looking to stay the heck out of the middle, and that is right where we are right now. So the plan for the S&P is to sit on hands. I'm not a big fan of that plan myself, but for the lack of anything else and staying out of danger, staying out of harm's way, we're going to be sitting on hands until we get to some of those extremes, and then we can start looking for some possible trades. On tomorrow's news calendar, or lack thereof, we have nothing for the U.S. session. Tomorrow at 8:30 out of Canada, we have the core retail sales month over month for April. The forecast for that is 0.7%. And that's it. Nothing else. So we have some small news here and there, of course, just like normal, but no big news for tomorrow. And the last time we saw that, Monday and Tuesday, we had some pretty good moving days. So, tomorrow we may have another good moving day. We've had the range today. It's had its chance to kind of collect itself. Maybe tomorrow we might have that good move that we kind of want to see, in all honesty, that we're hoping for. So news calendar is really light for tomorrow. There's not a whole lot to worry about. So like we always say, be prepared for anything, make that plan, trade the plan, follow the rules, and you'll be A-okay. Until next time, we'll see y'all then.